Are you overpaying for insurance without even knowing it? Well, in 2024, small business insurance premiums spiked by between 10 to 12% for things like cyber, property, and liability. And trust me, that trend is not slowing down anytime soon. My name's Marel, and I'm a former business consultant turned insurance broker. On this channel, I help businesses understand insurance and scale smart and efficiently. Today, I'm talking about why insurance costs are spiking, what most small business owners miss, and 5 things that you can do today to stay ahead of the curve and protect your cash flow without skimping on cover. Let's dive into the first area, and that's not reviewing your policies annually. Now, why does this even matter? Well, you're probably paying for insurance that you don't need, or you're missing insurances that you do need. And when it comes to insurance, think about it like a gym membership. You pay for it and you never go. Insurers, they love customers that are on autopilot. They're just paying their premiums, not making a claim, and sometimes overpaying for things that they don't need. So here's an example. Imagine a tradie with a concrete mixer. They sold that concrete mixer 18 months ago, but they haven't changed anything on insurance. What they're doing is still paying for that. Now, this can happen with any business and any asset. This would have been hundreds of dollars a year for zero benefit because they don't have that concrete mixer anymore. Here is how you can avoid this. If you're managing your insurance on your own without a broker, set an annual reminder in your calendar. Let's just say, for example's sake, your insurance expires on the 30th of July. Make sure at least 2 weeks before that, you've got a reminder in your calendar to look at everything. Look at your business activities, look at the assets you have, and making sure that the coverages there are aligned to what your actual business looks like at the time of the insurance. Otherwise, if you've got an insurance broker, make sure that you review and have a conversation. As an insurance broker myself and working with our team, it's very often that customers will just respond with everything's all goods and not want to have that discussion, but we will push to have the discussion because we need to understand what is the current state of the business. So for yourself, the takeaway here is that you want to make sure that when you have a broker, you are engaging with them before renewal and you're making sure that what's on that declaration accurately reflects the current state of your business. In short here, if your business has changed, then your policy needs to keep up to date, and all businesses change, right? In the space of 12 months, a lot happens, whether it's staff going up or down, revenue going up or down, new assets, new lines of business. There's so many things that can happen. The next thing I want to talk about is bundling insurances the wrong way. Now, bundling can be good. And what that means is taking a bunch of policies and putting it into one bundled policy, right? There are DIY insurance platforms online, and there's other brokers that can go and get policies as well that are combined bundled policies. And it might have things like professional indemnity, public liability, maybe cyber insurance. And if done the right way, it could save you money. If done the wrong way, it could be a disaster. Now, the reason here that this is important is because these generic bundled packs will often over-insure you for the things that you don't need and under-insure you for the things that matter most to your business. And they're generic for a reason because they're made to be one size fits all. But when it comes to business, we know that no two businesses are the same and everyone has their unique customer base, unique activities. They've got their own way and their own style of doing things, right? So it's very important to keep that in mind. Now, here's an example for bundling the wrong way. Imagine a tradie bundling their tools, their vehicle, and their cyber insurance with one insurer. But the cyber limit is just $10,000. Well, the reality is, in the event that a claim needed to be made, that wouldn't even cover the downtime from a basic ransomware hit. So this is why it's very important to look at your insurances and to make sure that when bundling, you're doing it right. And here are some tips on how to avoid it. When you are bundling, make sure that you're comparing quotes. Have a look at the bundled insurance policy quote and have a look at what individual quotes would look like side by side. Look at the cover and look at the total premium. Look at the policy wording. Another tip is to use brokers that can mix and match across insurers. So what you get there is the benefit of a bundled policy because you've got one broker that's gone out to do the work for you, but you've got specialized policies to match the tailored risks of your business. And the other tip that I've got here is know what to bundle and what not to bundle. So specialized insurances like heavy transport or professional indemnity, you want to make sure that you don't stuff up or miss the details on something as important as that because it could be an existential issue for your business if not done correctly. The next thing I want to talk about is higher premium does not equal higher cover. When it comes to premiums, people, will often think that if I pay more premium, I've got more cover and it's better protection. That's often not the case, and it often just means more fine print for you. So let's go through an example here. Imagine a local bakery. They've doubled their property insurance to cover every oven and every mixer in there, but they've skipped business interruption cover. Well, when a power outage shut them down for a week, they lose thousands in sales with no payout. How to avoid this? Well, focus on relevant risks. Don't just think about piling on all the coverage. Ask yourself, what are my top 3 financial risks if things go south? That will give you an idea as to what to prioritize. And most importantly, spend your budget on what actually counts, what's going to protect your business. Cut out the fluff. The next thing I want to talk about is ignoring the claims experience. When it comes to insurance, the whole point of insurance is so that if something disastrous happens or there's an event that causes you financial loss or loss of some sort, then insurance steps in to cover you. But so many people too often get fixated on the premium. And this is where the issue is. The issue here is just not understanding the claims experience with a particular provider or insurer or underwriter. Now, this is very, very important because the reality is lower premium, not always, but lower premiums can generally lead to lower claim services. Now, on the other side, there are some other insurers that might have competitive rates, maybe mid-level competitive, but the claims still suck. I can stand here and say that now. And it varies provider to provider, but it's very important to do your research or speak to your insurance broker to understand what the claims experience actually looks like. And I'll give you an example, right? Some providers out there, DIY insurance providers, will only communicate with you via email. So you've got a claim, whatever the claim might be, you can only communicate back and forth by email. The other side of that is using an insurance broker. There are some insurers that we work with who are slow when it comes to claims. And this is with a broker. We will follow up day after day after day, not so much putting pressure, but just shining the spotlight essentially to make sure that things are moving along, but they're still slow. And that comes to normally insurers where the premiums are cheaper, but not all the time. So it's really, really important on this point to ask your insurance broker about this. So how can you avoid this? Well, if you're using an insurance broker, ask your broker for real life examples of claims with that insurer, or ask them for what general turnaround times look like. Because if you've got a claim in your business, you want to make sure that you can address it and get back up to speed, get up and running again as fast as possible. The other thing is check the insurer reviews specifically when it comes to claims, not just pricing. But keep in mind, people will normally post more around negative experiences as opposed to the positive ones. So also take it with a grain of salt. Most of the reviews you'll see out there with insurance companies, they do pay out, by the way, but most of the reviews that you'll see out there will be not so great reviews. So again, take it with a grain of salt. And the other thing is build a relationship with your broker before you need to make a claim. The final point is not factoring in premium funding or flexible payment terms. Why does this matter? Well, it matters because cash flow is king when it comes to businesses. Lump sum payments can be an absolute drain on your capital. So how can you take advantage of this? Well, ask about premium funding. A premium funder is someone that steps in to pay for your insurance costs, and then you repay them back with some interest on top. Now, of course, it's more expensive than just paying for the insurance up front, but the difference here is it helps with cash flow. And it means more cash flow in the business for you to hopefully continue investing that for growth in other areas. The other thing is matching payment terms to your business cycle, right? So with premium funders through an insurance broker, they can negotiate on your behalf to get some flexible and favorable terms. So make sure that you're speaking to your insurance broker about that. All right, so let's recap the 5 points that we hit. I don't want you to have insurance blindside you. Step 1 is review your policy every year. Step 2 is bundle with purpose, not just blindly. Step 3 is focus on risks that matter, not just maxing out your cover. Step 4 is know your claims process before disaster strikes. And step 5 is look at access to payment terms that keep your cash flow humming and your business growing. Insurance is not a sunk cost. It's a lever for risk smart growth. Get it wrong and it bleeds your margins. Get it right and it gives you peace of mind, protects you, and gives you profits. I hope this helped you. If it did, drop a comment, hit the like button, and subscribe to the channel for more tips around insurance and scaling up your business. See you guys.